call this meeting to order. This is our work session on the audit committee. We'll go around the table. Everybody identify themselves to record, please.
Paul Orman, Peterson,
Dick Crane.
Amy Zimbowski representing the beautiful Key Eagle River.
The best part of Anchorage, right?
That's right.
Shale, representing West Anchorage. Bill Evans. George McHale, Municipal
Michelle Trujillo Trujillo.
Mike Johnson.
Yes, right, okay, good.
That's you? Okay.
Am I up?
You're up. I'll take the time over to you.
Awesome. Thank you so much. Again, for the record, my name is Michelle Drew, and I'm a partner with BDO. And for those of you who don't know, BDO actually bought out Municipal back in 2013. So although you do have a new auditing firm, you do actually this year have a consistent auditing team from the prior year. So many of the same players and people. And out of the gate, I want to say first and foremost, thank you for your business. We really appreciate it. And our goal is to provide good customer service, and we do ultimately work for customers. That said, I welcome you to contact me at any time throughout the year if you have questions or concerns regarding the financial elements of the city and the financial operations. And we can always have a good conversation. We can't always take on additional projects because of independence concerns, but we are always available to discuss questions, issues, whatever. So we just sent around a couple of documents, one that looks like this and another that looks like this. And so we do just have a short meeting today for 30 minutes. I'm going to spend the majority of our time talking to these two documents. And as I look around the room, I see some of you do have the actual financial statements and some of you do not. I believe those were delivered to the clerk's office and should have been distributed in the mailboxes. So firstly, we're going to start with the audit wrap-up document, and we're kind of going to go through this page by page. And right out of the gate, page 3 is the status of the audit, keeping in mind that our goal is to obtain reasonable and not absolute assurance about the financial statements. In order to obtain absolute assurance, we would have to do 100% verification, and that would be unrealistic. So our goal through our professional standards is to employ sampling mechanisms to do a cross-section of testing to get a comfort level that we do feel that the financial statements can be relied upon. The third bullet on that page says we have issued an unmodified opinion. For those of you who were involved with CAPA-related activities last year, that sentence would have said an unqualified opinion. So under the professional rules, that language has changed, but an unmodified opinion is essentially the same as unqualified. It is a clean audit opinion, which again does mean that we believe that a reasonable person using these financial statements can place reliance on them, that they are in fact materially correct. The last bullet, all records and information that we requested was made freely available to us. Management's cooperation throughout the organization was excellent. We work, of course, most closely with the controller division, the actual accountants, the people preparing the CAPA document, but we do spend a lot of time out in the field talking to various departments regarding Department of Health, for example, regarding grants and contract administration as well.
Mr. Chair? Yes, sir. May I just ask the record show Mr. Mahoney from municipalities?
Absolutely.
Okay, over on the next page,
And
results.
Judy's here also. Go ahead, sorry.
No worries. Results of our audits. The kind of first bullet point under that header is the municipality did not adopt any new GASB pronouncements in 2013. GASB, as you know, is the Governmental Accounting Standards Board, and that is the regulatory body that spells out the accounting rules for governmental entities. And that's a bit of a change that, if you can recall, last year the municipality did adopt some new accounting rules that the GASB put into place with a mandatory implementation date. So the next bullet identifies that the Anchorage School District did adopt those statements in 2013 calendar that the municipality had adopted in 2012. And the reason for that is because Anchorage School District is not on a 12/31 year end. They're actually on a June 30 year end. So at 12/31/2012, they hadn't made the switch, but they have in fact now done that. So if you look, excuse me, at the CAFR itself, on the statement of activities, you would see opening net assets as restated. The as restated portion is specifically limited and identified back to the ASD, the Anchorage School District column in that piece of the financial statements. And to our knowledge, no other significant changes in accounting policy or practice during 2013. The next section speaks to accounting estimates, and that's just to let you know that all financial data does inherently include some amount of estimation. While some items are very specifically confirmable to the specific dollar, some items are not. And so part of our goal as your auditor is to look at the estimates that you have included in your financial statements. Again, take an approach of sampling subsequent, what we call retrospective review. How did it actually shake out? Or for other items, we look at the mechanism or the process by which you actually do the estimating. And the municipality does have a number of different accounting estimates, including an assessment of whether a particular receivable is collectible or not, how long you think your capital assets are going to last, what that estimated useful life is measured at, unbilled revenues, so charges that have been incurred but haven't been processed by year end. A big one is the incurred but not reported self-insurance claims, and this is one that we can do a little bit of a retrospective review after the fact to see how much actually did in fact come through. But for year-end purposes, the municipality actually hires actuaries to calculate that, and then they have a process by which they take that actuarially calculated amount and plug it into the statement. So going through this list, there are a number of other items, and I'm not going to go through each one of those individually, but you can see there are a number of items that do require estimation. So from our purpose, we believe that there were no, again, significant changes in the methodology by which those estimates were derived this year. And furthermore, in the next bullet, we did not identify any significant or unusual transactions or any transactions for which there was no authoritative guidance. And I'm going to kind of back up and say with one exception, and that one exception is the asset retirement obligation, which is up in the estimate section. And we didn't call that out specifically because this was heavily vetted last year, but on the municipal light and power side, there is something called an asset retirement obligation, which is a type of liability that is associated with the gas field operation. It's not common to government, and for that reason, there actually is no GASB rule associated with that. So last year when this happened, when that item was reported to the statement, it was heavily vetted with us, with McGladrey and Pullen, another CPA firm, as well as with the GASB themselves. So we believe that that's legitimate. The next bullet there is the port, and this is kind of the other kind of big ticket item that kind of transpired in 2013. I'm sure you're all aware of the port expansion project and the MARAD related activities. That money had been transferred forward, the project took a turn, construction was canceled, and this happened going back to 2011. In 2013, management was able to, working with legal counsel, working with the information that they were able to get from MARAD, was able to go through that detail, in detail, to figure out which task orders and which line items of that project were in fact viable. So at the beginning of the year, the port started out with something like, I think, $120-ish million of an advance to MARAD. By the end of the year, with the audit, the municipality was able to carve out roughly wants to write off what is 61.
It was 101 million was placed in service in the
Sorry.
Okay.
So sorry. Well, at the end of the day, there's a $61 million right
So
now.
it's 61 or 65, or
65 million was written off. And we went through this with the enterprise agreement, so yes.
I apologize.
That's okay.
I
That's
apologize.
perfect.
The next section is corrected and uncorrected misstatements. So one of the required communications that we are mandated to professional standards is to identify to the assembly, to those charged with governance, what adjusting journal entries were recorded during the audit and what adjustments were identified that passed. So during the audit, there were in fact, I'm going to say there were 4 adjusting entries that we identified and that are included in this document. They're at like the next to the last page. And I'm just going to say specifically of those 4 journal entries, I would not place any of those in the category of this was an error that the auditors found and it was a problem. Specifically, 2 of them were for accounts payable invoices that were submitted to the municipality very, very late during the course of the audit. And the accounting rules mandate that we keep the accounts payable open all the way through the issuance date. So if the vendor doesn't send you the invoice until March or April, but it relates back to work that they performed prior to 12/31, we are in fact required to book an entry. 2 of those entries are for invoices submitted after year end. And I would say if you went back into the record 2 or 3 years ago, you would notice that that number was a lot higher. And I think that management has actually taken a much harder line of really in December, really hounding your vendors, send us your bills, send us your bills, send us your bills, because we don't, if the municipality doesn't get the bills from the vendors, they really can't close out the financial statements.
I think Lucinda has a comment on that.
Just an observation, when we came here in 2009, that number was $3 to $4 million. We instituted a policy internally to require directors to do a management rep letter to eliminate this problem. So the problem was really corrected in 2010, and it has been extremely immaterial since that time.
Yep.
Elby's got a
Thank
question.
you, Mr. Chairman. Thank you, Michelle. 4 is not a lot.
Oh, no, not at all, not at all.
I appreciate that. Well, what's the dollar amount?
The individual dollar amounts, the entries themselves are actually shown back on the next to the last page. And the 2 AP entries were
Okay.
for, it doesn't have a page number on it. At the top it says 10 and 11.
Yeah, 10 of
Yeah, 10 and 11.
Thank you.
Yeah, so the accounts payable entry is the 253 under water utility and 227 under wastewater, so just right at $500,000. In addition, there were 2 other entries that make up the 4, one of which is the port journal entry. And the port journal entry, again, this is not something that, oh, the auditors caught this, it was a mistake. This is something that management was working on, and got it finalized after they'd given us the original trial balance. And then the last entry, again, very small, $238,000, actually is a payment-related regulatory needs governmental gap journal. And then the other item is the past adjustments, and those are on the very, very last page. And professional standards do allow management, in the course of auditing, if anything is found to be not in compliance with the governmental accounting rules, the accounting rules allow them to say, we acknowledge that this is maybe not technically correct, but we don't believe the amount is material, it doesn't misstate the financial statements, and no one will be misled. And we do have the ability to pass on making those adjustments. And that is pretty standard, particularly if something gets found pretty late in the game. So there were 3 items that were on this, what we call the past adjustment list. The one at the way bottom, the CIAC, is related to the wastewater utility, and that is something that has been on the record for at least the last 10 years, if not longer than that. And it's something that was done wrong back in 2000 and has been being amortized radically for the next 10 years pursuant to a directive from the RCA. So that item will be going away next year. The other 2 items that were past adjustments are 2 investments that are reported in governmental funds. One is associated with Hillside Holdings, the Eagle River joint venture related property, and the other is the anti-fund. And the reason these are considered past adjustments, for those of you who are familiar with private sector accounting, in the private sector, those would in fact be investments. They're items that we've invested in, we're using them as an investment vehicle, they get capitalized as an asset. The governmental accounting rules are a little bit different in that if they are of a long-term nature or they're not what we would call available or expendable or not readily convertible to available expendable, that technically under the accounting rules, those items should be expensed at the fund level. And then on the, what we call the government-wide financial statements, they would be brought back on as a balance sheet investment. So both of these items were deemed to not be material, so they were left living in the investment. We don't believe again any of these financial statements. So those were the past adjustments. Over on the next page, I'm not really going to go through any of that except just to say we've already touched on most of those particular items. With regards to item one, the qualitative aspect of the accounting policies and practices, we do believe that the municipality has taken the appropriate steps and actions to do their best faith efforts to comply with generally accepted accounting principles of the accounting rules that are applicable to government. As I already said, in the grand scheme, if you look at the volume and size of the municipality, the complexity and variability of the different activities that are going on, for adjustments and recast adjustments in the grand scheme is nothing. I mean, it's just very, very good. On the same note, we're happy to see during the course of the audit, the control division particularly does have reference materials available, they have access to the gap statements, they have technical resources, and we noted on more than one occasion they actually using them. So I can report to you that there's definitely a concerted effort all the way around to do it correctly. Over on the next page, internal control, I'm going to skip this page because I want to talk to that when we get here. And then finally on this particular document, just a few other items required communication. There's significant changes. To our knowledge, there were no violations of laws necessary to our attention, that there were any legal violations or significant contractual or grant violations except for the one item that we'll talk about. To our knowledge, no fraud of any immeasurable, anything that we could be identified. We're not aware of any consultations with outside accounting firms. The municipality did not appear in our opinion to be opinion shopping on anything, and no disagreements with management. Everyone was very cooperative. From that point, definitely an excellent report, and we do very much appreciate everyone's cooperation. With respect to the federal and single audit, again, for those of you who, I know some of you are very familiar with this, you've been on the audit committee for a long time, but the municipality is the recipient of 6 federal grants, and for that reason is subjected to what's called a single audit. A single audit, so your audit is comprised of both the actual financial statement, it is materially correct in accordance with the accounting rules. In addition to that, the grants and contracts are subjected to kind of a separate audit altogether. And that separate audit looks at both the financial aspect as well as legal, contractual provisions of the terms and conditions of those grants and internal control. So as a frame of reference, the first little page here, in 2013, the municipality spent $38.6 million on the federal grant dollars. On the state side, it's $128.8 million. And you can see the trend of how that goes. You can see kind of the numbers dropping on the federal, some of the federal money is starting to go away. That trend is not unique to the municipality. That's all over the place. On the state side, however, it's still holding pretty steady. Over on the next page, so what does that translate to in terms of work effort for the audit itself? And the single audit rules require us to audit what we call major programs, and those major programs are specifically identified on the federal side for risk process. And on the state side, it's a dollar threshold cutoff. And each one of these 6 federal programs, which is comprised of 55 individual grants, and on the state side, 75 individual grants, we pull all of the details of those grants, all of the extensions, all of the hearings, all of the grant documentation details, all of the underlying detail, and test it for compliance with all the terms and conditions spelled out in the grant report, as well as on the federal side, there's actually 14 additional, 14 points. So you can see again that kind of the volume of activity that's going on is a lot, and there's a lot of stuff going on. At the end of the day, if we switch over to the next page, we're required to render an opinion on compliance. So out of the, what were the numbers back here? Out of the 55 plus 75, so 100 and whatever grants that were actually tested this year, we did issue a clean, unmodified opinion, which means, in our opinion, all of those 100 plus grants were materially in compliance, with the rules and regulations. And that compares with last year, we did actually issue a qualified opinion on one program out of the 132 that we tested in 2012. And no findings were reported under government auditing standards. There was one finding on the federal side, one finding of significant deficiency, which is over on the next page. And it basically had to do with records retention on the child care licensing program. And this is the same finding that was reported in 2012. And so we're required to test each year on the calendar year that we're auditing. So in 2012, when we tested that program, we found an error with records retention that went all the way through 2012. The audit wrapped up in June of 2013. We had reported it back to management. And so in 2013, we run the sample during 2013. The samples selected prior to June were still in non-compliance. The samples selected after June are in compliance. So what that tells us is we do report the finding again in 2013 because the first half of the year had this non-compliance element, but it does appear to be rectified by the back end of the year, so we expect this finding to go away for 2014. So that would be your single audit. With respect, I know you guys don't have all the CAFR in front of you, and you've got like 5 minutes, so I can just stop there.
Okay, let me see if there's somebody questions.
Sure.
Great, Jackson.
Just a really quick question, Mr. Chairman. So, I know that, if you have more grants to audit, then you anticipated that the cost could increase per audit, okay? But it looks like since you have 27 less federal grants and 25 more state grants, we should balance out financially, correct?
Yeah, because, and the municipal audit was rebid for beginning 2013, and I'm not exactly sure what number was placed in. This is what it was anticipated on. I don't have that number in my head, but at this point, I don't anticipate any overturn.
Appreciate that.
Yeah.
Thank you, Mr. Chairman.
Thank you, Mr. Browski.
Thank you, Mr. Chair. Overall, as I listen and read the report, it looks like a glowing report for the municipality, but I would like to get the CFO's opinion on if she saw anything in here she's concerned about or have discussed, or any thoughts.
No, I think it was a really well-done compilation of finances, so my compliments to our controller, Tom Flynn, who led that, and then a really well-organized audit again by BDO, so thank you very much. I think over the years, it's been really appreciated how, you really have run the organizations and adapted with the changes, and thank you. In regard to the finances themselves, we continue to improve, and we have really quite a stellar financial condition. Everybody in this room should be proud of it.
Any other questions from assembly members? You're right, the city's done a great job, and my thanks to BDO. You guys all did. It's good, and we've got your CAFR, so we've got that already.
Oh, it's your CAFR, it's our
I know,
CAFR.
we've
It's your
got it.
CAFR.
We have
You
your
know, I'd
audit
like to
done.
add something.
Just that it did go to the assembly members, so don't worry about that.
Okay.
Yes.
I just want to add something, because a lot of people think that the CAFR is published by BDO, but there is so much work that goes into this, and it is done by the Controller's Department, who works long hours. But the contribution that BDO makes is the letter that gives us a clean opinion. And so that is their contribution in addition to any adjusting entries that they might find. Anyways, I just wanted to make sure everybody knew that the credit goes to Tom Creek's department, and they really do a fantastic job.
Tommy did a great job, thank you.
Thank you.
Mr. Ray Jackson
Thank you,
has
Mr.
nothing.
Chairman. Yeah, I want to thank everybody who's involved with the audit, because I know how extensive it is, especially for our municipal employees who have to pull everything together. But one question, and everybody knows that I'm pretty adamant about the detail statements. Are we ever going to see them again?
I would love to publish them. As you know, we are still working on SAP, and we made the decision not to publish them this year. Again, that's correct.
So maybe after SAP is in place?
I'm hoping so.
And for those who aren't familiar, the detail statements are very, very valuable. And if you want to see what they look like, I'm happy to share that with you. But thank you for sending that.
I miss them myself.
I'm sure. Thank you.
Mr. Honeman, then we're
Thank
going
you,
to
Chairman.
move into SAP.
Just a quick question. Was the change in payroll is in 2014, correct?
Correct.
So this would not, it would not reflect anything. I'm
That's
curious
correct.
in next year's audit how that might play out.
There will be, okay, the impact will be we will accrue the 1 week that is less of a pay period. That would be one impact. So it would be an increase in the accrual rather than a reflection of an actual cash paid out. So, really it's a viewpoint on the finances. But the good part of that is, as a result of many employees taking additional leave from their cash bank in 2014, from the balance sheet perspective, what that does is it reduces the uncompensated absences number, which is usually around 21 or 22 million. So that long-term liability goes down, and it is essentially paid to employees at a lower rate. For example, if they took that leave cash out in the year 2018, their salary would probably be higher by 15%, and that absence that they earned maybe 5 years ago would be valued at a higher amount. So on an overall basis, from a financial perspective, it's a win for the city.
But I guess my question is specific, and it may be this can be a later discussion, but I'm worried, you hear something interesting about, I know it's not pension, but this is money that's due to an employee that has been earned but deferred. So does that become a liability that needs to stay funded, and how do we account for that? Or is it, do
No,
we just catch it when you can?
We accrue it. It is not, if we accrue it on our financial statements, it is not, it's deferred from the point that we pay a cash out later when they quit. And as I indicated, that number just went down because of the steps that we took here. But additionally, the most important
Always
thing
better
is,
than this.
well, more accurate data.
I'd like to, if we could get something a little more, I just, like I said, I want to make sure that we're funded, kind of like this closing of the landfill. I know it's apples and oranges, but making sure the fund is there, the funds are there to pay when the person leaves at whatever point that they're owed.
Right.
I know there was
The thing
additional-
is we have a huge cash pool balance.
I get it, we're on time.
Hundreds of millions of dollars in our cash pool, $1 billion in August, so we have plenty of cash.
Thanks for being here. This one is over. We start the next one in 3 minutes.